In a post-pandemic digital world, success in the insurance sector largely depends on the ability to offer omni-channel experience to customers, built around their actual needs and requirements. This can be achieved in part by overcoming blind spots caused by data silos, so insurers can properly understand their policyholders' unique risk profiles and deliver exceptional, frictionless customer journeys. Hello, my name is Jonathan Swift, and welcome to this live interactive webinar brought to you by Insurance Post in association with WNS, where an expert panel and I will discuss how insurers can unlock the power of smart data. Now, speaking on my expert panel, I'm delighted to say I'm joined today by Mark Collins, the CIO of Ageas, Pierre de Troy, the Chief Data Science Officer at Abakai, and Akhilesh Iyer, the EVP and Head of Research and Analytics at WNS. Welcome all.
Thank you very much, Jonathan.
Thank you. Pleasure to be on this.
Now, as I mentioned, this is a live interactive webinar, which means you can get involved in two ways. The first way is you can use a tab on your screen to ask a poll question at any point. We will also have some poll questions for you to answer. And if we push the first poll question live now, we will come to the results later. And that first poll question is, how has inflation / economic uncertainty impacted top-line growth and loss ratios? And there are three options here. Do you strongly agree with the statement? Are you still working out the impact of the statement? Or do you think it'll have no or minimal impact? So the statement is, has inflation uncertainty impacted top-line growth and loss ratios? Do you agree that it has impacted? Are you still working out the impact? Or is there no or minimal impact? Well, on to the webinar. And if I can come first of all over to you, Mark, can I ask, and carrying on the theme from that poll question there, how is inflation and economic uncertainty impacting the insurance consumers' behaviour and attitudes towards products and premiums currently? Mark.
Yeah, so I think if you look at it in the round, it clearly, for us, it certainly has had an impact, particularly on loss ratios. Claims inflation is one of those strange things there, but no one really talks about it outside of the insurance industry. But claims inflation is definitely visible. We are seeing lots of costs coming into the way that we pay out claims. That then in turn has a knock-on impact to the way that we have to price in order to compensate for that claims inflation. So it's definitely there. It's definitely having an impact on loss ratios. Do customers understand it fully? I think it's quite challenging, particularly on those customers that don't necessarily claim. They are still seeing price increases because the overall cost of claims is going up significantly. So it's quite hard to explain, and it's quite challenging for customers to understand it. But it's beholden on us to try and make it really clear and transparent as to how that is and why that is. In terms of what customers are doing when they see those price increases, I guess they are, they're looking to shop around more, looking for better value for money as they see it. And our job is to try and, through what we're here to talk about, smart data, is try and make sure we are as accurate and best we can be from a pricing point of view for one of those customers either coming to us for the first time or renewing. So I think claims inflation is really having an impact. It's really hard to understand for customers, and we're really having to work hard in the background to try and minimise the impact on it for them.
Pierre.
Maybe just to echo and add to what Mark has said. I think we were obviously at unprecedented levels of inflation, and it's really hurting the pockets of a lot of consumers. I think what's quite interesting as well, if you look at the inflation figures, and for different segments of the UK population, it has a different impact, and it's especially hitting the lower income households quite hard. So what we've seen in the data coming through is that consumer behavior definitely is starting to change. Specifically, we often monitor price elasticity and sensitivity to price changes. And we can clearly see in a lot of our general insurance products where a lot of segments of the population is much more sensitive to small changes in price because it is having quite a detrimental effect. Now, in terms of opportunities, I think probably for the insurance industry, there's quite a few opportunities of innovating through different products. I think there's been a few insurers that have launched almost slimmed down lower cost models to try and address these needs for customers. And again, to Mark's point, using data to identify those customer needs effectively, I think is a great opportunity in the insurance industry.
Akalesh.
I think agree with both the previous speakers, just an additional color in the sense that we're seeing claims inflation specifically in the motor insurance and property insurance, given the fact that there's significant disruption in the supply chain and therefore the repair networks, garages, etc., which is where the cost inflation is being fed and then translating that into claims. Likewise, on the property side, I think there's labor shortages, supply disruptions, and therefore the cost and of repairs and rebuilding are increasing tremendously. And as a result, the premiums are going up across the board. I think obviously there is resultant churn that is happening with customers trying to value shop. There's an additional small trend that we have observed with a number of our customers. We are seeing with this economic uncertainty, there's also being a slight increase in fraud, where fraudsters are trying to make a quick buck, whether it's in the travel insurance, motor, property space. I think rise in electronics, jewelry, and baggage claims, I think corroborate to this behavior. So that's some interesting trends that I just wanted to add.
Can I ask Akalesh? I mean, how can insurers then gain a competitive advantage and ensure that customer delight that we aim for by being more effective using data in decision making, whether that is now or in the future?
That's a great question, Jonathan. I think, and $1 million question. Essentially, I see this in 4 particular ways. I think there is a lot of benefit that insurers can gain in improving their customer experience. I think you look at the richness of data that is available today, which we didn't have earlier. For example, sticking to motor claims. Today, you have the ability to not only process claims and policy data, but also handler notes, handlers who are handling the motor insurance. And your ability to predict whether that particular case is a total loss or will go to a body shop for repairs is very, very high. In fact, we have observed as much as 40% reduction in claim cycle time for many insurers by making sure they are effectively processing that information and data. And this reduction happens by identifying total losses right at the first notification of loss. So that's significant improvement in claim cycle time, and that improves customer experience also. Obviously, data also allows then for us to determine leakage and indemnity costs, and if you're able to manage that, then that's a win-win proposition. There are some additional items. I think with access to quality data, insurers not only can reduce their claims life cycle, but improve underwriting capacity and create far better pricing models, to the point that Mark was mentioning on being effective in pricing policies better. But there is now the ability to process a lot of unstructured data that comes in forms of forms and such, augmented by the regular information that's available within the insurance company. So there's unstructured data. There's also third-party data, subscriptions, information from the web. There's the ability to augment your traditional pricing GLM models with machine learning models and create new benchmarks. And therefore, the ability to price, but be far more effective in the way you use the underwriting capacity has improved. There's new products, I think, which data allows you to launch in the market. Telematics is gaining traction. You have driver behavior, you got usage behavior, you got wearables data. So products are becoming far more customizable by the insurance company. I think they're bespoke. Claims patterns and customer uptakes, is pushing for these bespoke products. I think you can pay by miles, you can have coverage by specific routes, for example, sticking to the motor example. So I think the ability to innovate and come up with new products has increased significantly with the availability of data. And therefore, you see this multitude of benefits that come through for an insurance company and causing customer delight across the life cycle of an insurance product: claims, underwriting, pricing, even distribution. I think underwriters today, for example, can churn out quotes in under 24 hours to brokers. I think that causes tremendous customer delight as well. So I think in a situation where We're coming out of the pandemic, but there's economic uncertainty. The fact that we're moving towards an increasingly digital world, data is a huge asset if the insurance companies are able to leverage it.
Mark.
Yes, I think if I sort of tackle a couple of the things you said, so customer delight. I think there's lots of things around the personalization that we've probably just spoken about, but I do really think, how we personalize those journeys, how we understand customers' wants and needs and behavior to help them through that. I think customers are looking for simplicity, for speed, to make sure that an experience is not confusing, is really straightforward, whether that be for purchasing a new policy, or whether it be for even making a claim. How easy can we make it? And leveraging data is the way that we can achieve that, particularly in the online space, perhaps going further than we've ever gone before in delivering online experiences from an end-to-end point of view, including through claims, which is still relatively new, but progressing quite significantly. Focusing on that customer delight is making great customer journeys, making them as simple as easy as we can do for customers. And then I think competitive advantage, I guess there's a couple of areas there. I think one of the big ones is probably fraud. So we know we've touched on it already. In these sort of times, fraud does tend to tick up. And I think the ability to spot it early, make clear decisions around it, can give you a good competitive advantage, because ultimately if fraud happens, all that then occurs is it goes onto your pricing. So the earlier you can do it, the earlier you can deal with it in the whole life cycle, the better. And I think certainly smarter data, better machine learning model much earlier in that life cycle is certainly helping organizations gain that competitive advantage.
Pierre.
I think Mark and Akhilesh make great points. I think sort of looking at from two lenses, so from a customer point of view and then from insurer point of view. From a customer point of view, I think the key is that data and having more data of it gives you an opportunity to better understand customers' needs and pain points. And the competitive advantage comes from actually having better and more comprehensive data than your competitors. So by having that, then you are able to address those needs more effectively. You can personalize better, and you can ultimately select better risk as well through that approach. So I think there's quite a lot of opportunities looking at from a customer lens. I think from the insurer lens, it's sort of the key areas. Having data will enable you to better sell and attract certain risk. It helps better price and manage risk, especially as the colleagues mentioned, fraud. And then also it helps operate at a more cost-effective manner and serve customers in a better way by using data in a smart way. So I think there's both a lot of value to be added, looking at it from a customer point of view, but also from the insurer's point of view.
Thanks very much, Pierre. Just like to remind you, the audience, that you can ask a question for the panel by using the tab on the screen. And we also have some poll questions. And we'll come to our first poll result now. So the first question we asked was, has inflation, economic uncertainty impacted top line growth and loss ratios? And a huge amount, 72.7% have said, yes, you agree with that statement, whilst 27.3% are still working out the impact. 0 of the people out there have said that it is having no impact whatsoever. Does that result kind of tally with what you'd expect as a panel? I don't know, Pierre, I'm looking at you at the moment. Is that really what you'd expect?
I think it definitely ties in with our own data and experience that we're seeing, especially in the claims inflation space. We've seen unprecedented levels, and that obviously impacts our bottom line and loss ratios. And as I mentioned earlier, we definitely see it from the consumer side as well, where we become more sensitive to price changes. So it's definitely had quite an impact both on the bottom and the top line.
Akhilesh?
No, absolutely. Ditto that sentiment. I think for pretty much all the customers that we work with in the insurance industry, this is a trend that we are seeing and likely to continue for a while. And therefore, I think it's all about how do we react to the situation to minimize customer churn while ensuring that you are able to price policies effectively and profitably.
Okay, Mark, I mean, do you agree with both Akhilesh and Pierre on this, Sam?
I echo the comments completely. It's here and it's going to be here for a bit longer yet. So we need to really get under what's happening and what we can do about it. So,
yeah. Excellent. Well, we're now going to put our second poll question live, and our second poll question is: do you have the tools or solution to digitize data? And the answers are yes, and they are delivering significant benefits. Second answer is lots of tools out there in the market, but relevance and use cases are unknown. And the final one is not sure how to digitize data. So do you have the tools and solutions to digitize data? And there are 3 options for you to think about on that subject. And I'll come to you first of all, Mark. How can digitizing data help insurers, and what steps can they take to get started on this journey?
So I think take that question in 2 parts, if I may. So in terms of how digitizing data can help insurers, I think there's a huge amount that data can do there. I mean, the list is almost endless, but to give just some examples, I think really building, once you've got really data that you can really believe in, I think that the real excitement is what you actually do with it. And so, I think there's, whether it be for supporting customers or for supporting employees, how do you start to embed that either in customer journeys or business processes, or actually start to replace business processes that you've got, because you can use the data and the learning you can take from that to replace some of that, simplifying people's lives, say both internally and externally. So I think digitizing data is really powerful. It's really exciting, the sort of part of the world we're looking at now. We've got some great use cases that we've looked at, and we'll talk a little bit more about them later, I'm sure. But it's a really, really important part of what we're doing, and really exciting. Ultimately, will impact both our top and bottom lines if we get it right. So it's really important. In terms of where you get started, that's probably a slightly bigger question. It can be a bit scary, I think, if you haven't started that journey. But really, I guess the first bit is, we're going to talk about data silos later, I'm sure, but really understanding where your data is and what you can get from it in in not a utopian world, but what business use cases can you get that you can really start to understand how effective having that data in a central location can be. So I think you've got to start at some basic levels, particularly if you're coming from a relative sort of legacy background where you've got lots of data in different places. Have a real think about how you can do it, and how you can do it in a way that's going to add value to the business all the time. It can't be a technology-led piece of work. It's got to be, how do you continue to add value? But I know we're probably going to talk about silos in a bit, so I won't step into that bit just yet. But getting the basics right to start with is going to be an important piece.
Akhilesh.
I echo, I think, Mark's comments 100%. But essentially, digitizing data has 3 benefits. One is obviously speed. Having access to digital information speeds up everything. I think your ability to interact with customers, to process requests, to process claims, a lot of it. Second, quality. I think digital data is far more accurate. I think your ability to manage digital data is significantly better from a quality perspective. Even if it's not accurate, you will have systems to make it better. Third is intelligence. I think digitalization allows you to really harness the power of the extra information available at hand that you have digitalized in a much more significant manner than you would have ever been able to do. In additionally, you can scale quickly. I think allows you to increase your business much faster, providing speed to market. And just a couple of examples, I think Mark alluded to them, but if you are able to maximize your straight-through processing for continuous claims, let's say for health and pet insurance. Now, knowing the context of the ongoing health condition from a previous claim, including from medical notes or doctors, hospitals, which historically have not been in digital or structured format, they've been unstructured, but now that you're able to do that, allows you to anticipate the claim far better and deal with the claims more effectively, therefore creating customer delight. Or, for example, if you take the London Lloyd market, now there's a ton of data available for current risks in the market. but in unstructured formats like PPTs, Words, whatever, other formats. But digitizing this data allows you to not only minimize processing time for onboarding customers and renewing the risk, but also leads to far better underwriting and pricing decisions, right? And I think the third trend that we worked with some of our customers is using secondary market research to help create data sets that were in the past not available in some form. So this is something that we are working with brokers, for instance. A case in point is, let's say, injuries, number of injuries sustained by players in all major football leagues in Europe. And you can classify that information by age, position that they play in, and provide information to brokers to, on typical payouts arising from injuries, so on and so forth. So the ability for brokers then to prospect football clubs and write much better products or give tailored solutions is far better. So I think significant benefits that is there, and we've done it through our product called Scans. But in terms of how businesses can start, I think starting small in pilot phases is better than trying to go big bang. Try and focus on areas which impact the customers first, then in other areas. For example, speech to text or digitizing forms, which is both small and then but helps customers. Then you can move on to automating of more core insurance processes such as claims or settlement or underwriting submission, so on and so forth, before you finally take an end-to-end process transformation using some kind of a platform-based approach to digitize and eliminate data silos. So I think that's what I think.
Pierre.
Yeah, I think sort of the value of digitizing data, I think, is infinite, and there's so many applications. So I won't discuss those, but I think in terms of the steps to start the journey, I think there's two components. So there's the almost looking forward, and then the how do you deal with the legacy and the historical situation. I think going forward, I think really the approach for modern insurance companies should be that they almost approach running the business as a data-first approach. So every time a new product or service is developed, you start right from the start thinking about what data will be captured, how will it be captured, how will it be made available in real time, and how will it be tied together with other data sources. And I think often what happens is it's almost an afterthought, and that then creates issues down the line to try and bring in data at a later stage. So I think looking forward, always start with the data-centric and the data-first approach. And then dealing with the legacy situation, I do agree with Kalesh's suggested approach of doing it much more in an agile manner. And rather than trying to do a big multi-year a project, often start with very clear use cases, start with applications in areas that will drive a clear business value, because that will help drive additional momentum to continue the transformation over time. So I think start small and do it in an iterative approach. I think will yield the best results over time.
Mark, I know you're itching to talk about this, but what problems do exist with leaving data in silos, and what steps can be taken to alleviate this? This is obviously something we're going to need to talk about.
Yeah, so silos do cause inside the organization, both from the ability to digitize that data, as we're here to talk about, but also just for some basic stuff like MI reporting, compliance. How do you know through all the different silos that you quite quickly end up, if you don't have a sensible, smart architecture, if you like, to deal with it? Your data can be in different places. It can get out of sync quite quickly. When it comes to reporting on it, is it the right data? Is it of the right quality? Have you got the right lineage? All those things then start to become really, really important. And I guess one of the key things of being able to use data well, and to be able to digitize it, is to have the right governance and management around it. So that the data that you are exactly what it is. It's been formatted correctly. It's got the right quality, etc. And it gets really hard when that's spread across various different systems and services that have been there for a long time. So I think trying to move away from that to having a more, at least to the governance around it, so that you're much clearer around, as I said, around the quality and of that data is really, really important. And without getting that right, I think you cause yourself problems, and we have done. So I'm speaking from experience. Once you've done that and you've removed away from that siloed view of the world, then clearly you're moving into a completely different space, and therefore you understand that data really well, and to be able to act on that data and to use it in a far more offensive way than perhaps you can do in a slightly more defensive way if you look at it in the way that it was before, becomes really beneficial to you. And that's where I think you get the advantage. Digitize that data. We've spent 3 years on our program getting to that position, so I think we're in a really strong position now, but it's taken time and effort to move away from those silos and to get the right governance in place that allows us now to really get effective at the analytics and start, particularly when you're working in real time. You've got to make sure that data is absolutely spot on, otherwise your errors are going to creep in really, really quickly, and we can't afford that. So that would be, I think that's the challenges around silos. And I think, you do need to come up with a smart way of trying to move away from them if you're going to be successful in using smart data.
Pierre.
Yeah, I think there's quite a few issues with having data in silos. I think it often results in poor customer experiences. I recently went through an insurance claim, and it was quite shocking, just the type of experience that I had, because you would start at one part of the provider, and you would provide your details, and then a second later you get transferred to somewhere else in the same business, the same company, and you had to share your data again, and there was a third time. And then you would get communications back and emails, and you can see clearly the systems aren't talking to each other, and data aren't being shared. And that is because data is kept in slightly different business units, there's slightly different silos, and it ultimately just drives friction for the customer experience. So I think that's a real issue that a lot of insurance companies still have. And then from a business or commercial point of view, I think there's a lot of issues because you don't get that holistic customer view. So, for example, in risk pricing and determining which customers to retain, it's often really important to have that end-to-end view of customer lifetime value and customer profitability. I think it also enables cross-selling across different products in the insurance company. And if you've got data in silos, it just makes all those applications really much more complex. So the way to address this or alleviate it, I would echo a lot of Mark's comments on this. So I think ideally where you want to end up is be in a place where you've got all the data in real time at your fingertips, and it really enables you to do fantastic analytics and develop and create wonderful algorithms, and then also drive operational processes off the back of it. But in order to get there, you have to have, at a higher level, you have to have the architecture in place to do that well, and the governance around that to enable that setup. And then at the highest level, it's culturally you need to have the right approach. I think if you've got different business units and there's politics involved and people don't want to share data, I think that all complicates the situation. So I think you have to solve it from a cultural, architecture, and technical and governance point of view, and then ultimately you'll end up in a great position where you can leverage data across the whole business and not just sit with data in silos.
Akhilesh.
I think both Mark and Pierre have covered a lot of what I wanted to say, but I think obviously lack of enterprise level information is a big issue with data residing in silos. Each department's analysis and information is limited to its own view. There is oftentimes a lot of problems, like Pierre mentioned, in customer experience. There's also opportunity that is lost on the table. I think, for instance, insurers often have a lot of information which is available on customer behavior from cohorts held in parent and child companies, but they're not tapped into. We have seen that there is potential for cross-utilization of that customer information across products, driving cross-sell, upsell, but that is also something that is hindered in a big way with data silos. There is also obviously decision-making which tends to become a little bit more reactive than proactive. I think just the fact that you do not have the information to drive proactive strategies for customer acquisition, retention, or delight, inhibits your ability to grow your business in the most appropriate manner. I think the fact that when you're trying to build all of this in order, it's important that we prioritize our approach to remove data silos. We understand what we are trying to solve for. There are organizations who are spending millions of dollars to create a very, very large enterprise data, warehouse and such. And after that, either technology is obsolete or the usage is changed or there are regulatory changes, etc. So you've got to be able to prioritize what is it that you're trying to solve for, look at specific problems that you want to address, and then work your way backwards on what data silos you want to eliminate. There is information in legacy systems of records. Having said that, I mean, there are new age solutions which can work around that. I think there's a lot of technology term that's thrown around. But for you to be able to leverage information sitting on those legacy systems without having to necessarily spend millions of dollars on upgrading your systems of record. There are now machine learning techniques for integration of data, deduplication, match and merge, detection of patterns, data stewardship. All of these are sub-techniques sitting within the larger umbrella, which I think Mark mentioned, to have a proper centralized data access and governance ecosystem and a data quality organization. And of course, the cultural alignment to take it all forward. I think this is one of the biggest opportunities that insurance companies have, rather than looking at it as a problem. I think if they think of it as an opportunity, there's a lot to be gained.
We have a follow-up question here, Akhilesh, which I will come to you first on. It's somebody from one of the audience members said, even today, a lot of enterprises are struggling with fundamental data quality issues, let alone data silos. Is there a quick path to fixing quality of the data, that is an issue rather than the silos in themselves?
I think increasingly there are a lot of, so this is a great question. And oftentimes, and this is to my point, prioritize what is it that you want to do before you start making large investments. But there are now a lot of tools, mechanisms, techniques, which are also automated for you to fix data quality issues in your existing data. And that speeds up the whole process significantly, 20, 30, 40%, improves your ability to use that data for decision making. So yes, there are techniques, and I mentioned some of them, within, even if you look at the larger umbrella. So I think there is ML-based data quality engines now available. We use some of them, and there are other factors or methods which allow you to do that. So the answer is yes.
Mark?
I'm not sure there's a quick path to fixing it, but there is a path for doing it. And I guess I agree that the technology is one part of it, and there's definitely tools, etc., out there to do it. But I also think there's a couple of other areas that organizations should think about. And I think one is literacy, so data literacy, understanding the use of data, why it's important. And that's not just for data experts, that's an organizational wide piece. I think it's becoming so important. I think to try and fix some of these, you've got to fix them at a fairly low level in the organization. So the more data literate your organization is, the easier it's going to be to get them working at that lower level. And then I think that governance piece that I've touched on before, I think, leveraging the use of data stewards in your organization to own that data, to manage it at a much lower level, will get you good, stronger returns quicker, because they're doing the day-to-day work around that data in the first place. So I think getting a data governance right and the organization to support that, I think, is really important as well. And then choose the areas wisely. So you're not going to solve all of this overnight in one go. So choose where you think you can add the biggest value quickest and go and target those. Because as soon as you start getting the return on those, you'll start getting more buy-in for tidying up everything else.
Pierre?
Yeah, I agree with both Mark and Akhilesh. So I think in terms of quick fixes, there is quite a lot of development that's happened in recent years of new algorithms and approaches that helps automatically flag, for example, outliers in data, helps impute missing data and clean data. And I think that's quick in the sense that you can automate a lot of those processes, so that is valuable, but it's also limiting. It doesn't cover all applications. So I agree to Mark's point. Some of the ways to fix it is not necessarily that quick. So you have to start and go back to the source of where the data gets captured. And if that is by, for example, claims handlers not entering data or entering data incorrectly, there is an education piece and there is an approach that you need to change at capturing that, or change the way in which that data is shared. So right from the start, it's not manually entered. It's actually there's automated ways in which you populate the data. Those type of fixes tend to take a little bit longer. So I think the key is to prioritize where you'll get the biggest bang for your buck. But I think there's some quick fixes with algorithms, but then some areas which will take a little bit more of fundamental work to get the data quality right.
So just to remind you, if you do have a question, please use the tab on the screen, and we will ask our panelists at the end of this discussion. Also, we had our second poll question, and we'll come to the results of that poll question now. And we did ask, do you have the tools or solutions to digitize data? There were 3 answers. The most popular answer was yes, and they're delivering significant benefits. The second most popular answer was lots of tools out there in the market, but relevance and cases are unknown, while 24% said not sure how to digitize data. So I'm hoping that our panelists' response there of perhaps giving you some ideas about what to do in terms of that. I don't know, Akhilesh, is that result somewhere in how you'd expect it to be? But the kind of, it's kind of fairly even-ish, but the most popular one is that people are using these solutions and they're delivering significant benefits.
I would interpret this data slightly differently. So I look at 60% of people who do not know how to digitize data, or know that there are tools available, but are not sure of the use cases. And for people who are seeing good results, that's good. But I think one of the reasons why 2 and 3 happen, especially 2, is because a lot of the tools are digitization tools, which find ways to capture unstructured data and digitize them. But I think the specific use cases, if they are very specific to the problem you're solving within the insurance landscape, those give much better results. So I think when you're trying to frame your approach to digitization and select the tools, very specific domain or use case specific examples, if the tool has solved for, that is what is going to give you the maximum benefit. Obviously, you're trying to look at an ROI of the investment you make. You're also looking at scalability. You're also looking at interoperability. So if the same solution can be used across multiple use cases, even better. But I can say that there are many tools available, but not all of them are use case specific or interoperable for insurance. And if you are able to identify those kind of things, that's where your ROI will be maximum.
So we now come to our third poll question. And our third poll question is, do you get buy-in from the C-suite to invest in improving data quality and delivering information at decision-making time? And there are 4 answers here, and they are yes, it's an area of primary focus, to some extent, but not as much as I'd like. They pay lip service, and finally, we get no buy-in. So we want to find out, how much buy-in are you getting from the C-suite to invest in improving data quality and delivering information at decision-making time? I suppose, again, expanded on this point, and I'll first come to you first of all, Mark. How can insurers get buy-in from the C-suite to invest in improving data quality and delivering information at decision-making times? What would your recommendations be here?
I'm mulling over the questions at the moment. I think I'd always go for the second one down, to be honest, 50. But I think that to get buy-in, I think that there's a couple of key areas I would look at. So I think the important bit here is really being able to demonstrate the value that it can add. So and that's why really focusing on the use of business use cases and delivering business benefit is absolutely the number one thing, whether that's for the customer or internal. It has to be showing that, not that it's a technology investment in X or Y. That just is something that happens underneath the covers, if you like. It's got to be really demonstrating that business value. And I think you can really then, start to get people to look at it, to understand it, and then really to explain how, once you've done it, what you can achieve with it. So, we talked a bit earlier about digitizing data and what it means and what it can do. And I think to really bring that to life for the organisation and show that a change you can then bring to the market, both for yourselves and the ability to change at pace, but also the improved customer experience. I think bringing those things to the front and sort of front and centre of mind when you're discussing these investments, I think is the way you get the most buy-in from it.
Akhilesh.
Great question. I think earlier this year, we had done an interaction with a number of our customers in the insurance space and across the globe. And I think interesting findings, almost 66 to 70% of the C-suite absolutely were convinced that they need to improve their investments in these things if they have to be successful. The other good news was that almost 77% of the members, the C-suite, were planning to increase their budgetary spends on generally data and analytics, but on data quality and information, etc. But the bad news was when we actually translated of the intent to action, only about 37% were actually making the increase in investment. So that's the gap between intent and execution. But in terms of general recognition, I think there's increased recognition now than even 24 months ago, especially post-pandemic, where they are seeing that they need to improve and their overall data ecosystem and therefore invest more in it. Having said that, I couldn't agree more with Mark. I think the most important aspect is to be able to deliver results and show results. And the way to do that is to pick small, prioritize, either choose an area which is high ROI, high visibility, or easy to execute. It need not always be the most complex problem that you're trying to solve, which takes months and months and loads of money with questionable results. 2, use a POC agile approach to prove the value of your investments and the value that the underlying data can do. Prioritizing on that and having an agile approach to deliver POCs is going to be, I think, the second most important thing. And then once you do that, you get the buy-in from the C-suite and ask for greater budgets and focus on your data initiatives. I also think that there are certain other broad challenges I think that data analytics organizations face with. Oftentimes they're trying to solve for individual problems. There may not be a coherent data analytics roadmap for the organization. To start with that, I think is a good idea. And then along the way, you do the POC, show success, and then build upon that.
Can I ask then, Akhilesh, are there any barriers still hindering data innovation in the broadest sense?
Yeah, I think the first one is what I mentioned. I think a clear lack of data analytics roadmap and strategy is one big hindrance. In some of the larger organizations which have historically done well, they tend to centralize everything with all decision making at the central level. That creates a problem of ownership. So the business users who are actually going to use the data and the analytics that comes out of it sometimes lack. They don't give the buy-in required for a program to succeed. There's obviously data silos and the ability to process data, which is another issue. Lack of prioritization. I think you want the technology and the business teams to work hand in hand, or the data analytics teams and the business teams to work hand in hand in making sure that the prioritization of use cases and areas is done properly. If any one of them work on their own stream, it's a barrier because then you don't succeed in that program. There's also other challenges, I think, acquisitions that happen in industries, so things not fully in your control, but I think leads to integration and the regulatory issues. And then there's obviously a lack of technology awareness, adoption of the latest technology and things like that, which I think if you have the other things in place is actually a little bit more easier to solve. But I think it's important that you keep an eye on that. So I think these are some of the barriers, in addition to the fact that you've not made a good business case with your C-suite.
Pierre.
Yeah, I think in terms of what hinders or what makes data innovation successful, I think there's sort of four key areas. It's one, having really good data. It's then having good algorithm and analytics on top of it. It's having good implementation of your data and analytics, and then it's overall having a good data innovation culture. Now, for me, it's often actually the area that probably works the best or least hinders innovation is on the algorithm and analytical side. I think there's quite a lot of open source development and really sophisticated algorithms that's easily accessible to people in the insurance industry to really drive good business decisions once they have the data. I think what hinders data innovation is often on the quality of the data and having access to that, and we've touched on a few of those points earlier. And then I think another very, very key area is the implementation of data. I think what I see often across the board is you get a lot of interesting analytics, interesting, predictive models, and there's presentations on the impact that it will have and how it will revolutionize either a customer journey or a pricing model or a fraud prevention approach. But often those algorithms and those analytics don't get into live production. And the reason for that is the whole integration and implementation of having data available at the point that it needs to make a decision or drive a process. So I think that's one key area where I think a lot of insurance companies fall short, and that hinders data innovation. And then lastly, in terms of having a good data innovation culture, I think you really need buy-in from the C-suite and from senior leadership in order to make sure that it gets prioritized, that the necessary investment in the infrastructure to leverage data effectively happens. Otherwise, that will definitely hinder innovation again.
Finally, Mark.
Yeah, I noted just a couple of builds on what's already been said. So I think getting the right operating model is important. So structurally, how are you set up to be able to receive the data or deliver the data? Who's going to use it? How are they going to use it? Try and get as federated a model as you possibly can, because the more central you make it, the less, the less that data is available, the less that people can do with it. But that kind of goes hand in hand with my second point, which I've mentioned already, but that's around data literacy. So it's all very well federating the data, but if people don't understand what they've got and how to deal with it, then you're going to struggle there. So I think making sure that you've got well-educated people who understand what they can do, what the art of the possible with that data is, and also more importantly, what they can't do, because I think there's quite often you spend a lot of time, because people don't understand what they've got in their hands, you spend a lot of time either explaining it or doing things that aren't of. So I think getting that data literacy component right, I think is really, really important. And then I agree completely with the culture piece, really going to this world, particularly around some of the machine learning models. It's very much a test and learn approach, and some of it won't work. And so you being prepared to fail, and what that really means is really important in this space. There is some low-hanging fruit that everyone goes after, but there's some nuggets out there that you'll only find through going through a test and learn approach to it. And I think getting that culture right and making sure everyone's accepting of that, I think is really important. And then I think that the wider buy-in of the investment, I think we've covered, but clearly it's important you get that. Otherwise, you're not going to get off the starting blocks in the first place to even worry about data innovation.
Just to remind everybody, we've got a few minutes left if you want to pose a question to the panel. We also had a poll questions, and we'll come to the our last poll now and the poll result. So we asked, do you get buy-in from the C-suite to invest in improving data quality and delivering information at decision-making times? 36.4% of you said, yes, this is an area of primary focus. 59.1% of you said, to some extent, but not as much as I would like. 4.5% say they pay lip service. Thankfully, 0 out of you, they get no buy-in at all. So I think the result there is mostly positive. I think, Mark, you said that question 2 was answer 2 is probably where you might have expected things to land there. Is that right?
I'm always in that position, 50, so.
Fair enough. Akhilesh, is that how you might have expected the poll and the viewers out there to land with the result here?
Yes, sounds about good. Absolutely.
And Pierre, does that resonate with you in terms of the result?
Yeah, I think that's what I would expect. What would be interesting is actually if we were able to take that poll over time as well, and what the results would have looked like 5 years ago and versus now. And I would suspect there's more and more buy-in for it. So hopefully it's trending in the right direction.
Yeah. Pierre, can I ask? I mean, how is data science and AI then creating value within insurance at the moment?
Yeah, I think we sort of live at a really interesting time where there's data science and AI is creating incredible breakthroughs. I think if we look just over the past couple of years, there's been really great breakthroughs in new language models that understand text and the context of what's being said. There's models that predict how protein structures work. And then there's also sort of in recent years, algorithms that not only look at understanding data and predicting of historical data, but actually creating new data. And there's been, over the past year, diffusion-based neural networks and in the creative industry, generating new interesting artworks and interesting work. And it's really a fascinating point in time for AI development. And specifically in the insurance industry, I really think there's applications across every point in the value chain. So firstly, starting with understanding customers' needs, and to a point Mark made earlier, I think AI and machine learning algorithms really give the opportunity to personalize products and services much better to customer needs. I think one of the bread and butter areas for insurers are predicting future events, and I think with more advanced algorithms, it really improves the ability to accurately and predict what's going to happen, and then come up with much fairer pricing for customers. I think, as we mentioned, given this area of high inflation, that will probably drive a lot of additional fraudulent activity, and I think AI is a key area to help identify that proactively and manage that in much more effective ways, so that for honest customers, you give a much better customer experience and a fairer product. And then I think there's a range of applications on overall customer servicing, where you can use AI in ways to automate processes that previously was quite slow and quite manual, where smart algorithms can understand what a customer is trying to accomplish and proactively manage and service that customer. I think those are few applications across the value chain, but I think there's numerous areas where data science and AI will really revolutionize insurance in years to come.
Akhilesh?
Yeah, I think Pierre covered some interesting use cases. Now, if I just were to take the claims lifecycle, for instance, today, when a customer calls into a contact center for first notification of loss, there's the ability not only to have AI in the interaction process, but also in terms of being able to understand the sentiment of the caller and determine what impact it might eventually have on Net Promoter Score. And is there a mitigation method that the insurer needs to put to prevent churn or improve customer satisfaction, things like that, just as an example. Or the fact that we spoke about earlier, there are historical fraud models which were used to detect fraud, but you also have surveyor notes, and you're able to process text smartly and then use the surveyor notes to make sure you have a far higher, richer information that you're processing through AI and pushing it into the claims processing value chain, where you either push a case to the special investigation unit for fraud with a much higher prediction rate, or push through for straight-through processing, improving customer delight. Or take a third case, for instance, where there's property loss, and then there is drones which are using to take images of property damage, and that data of images is processed directly through algorithms to determine not only the severity of the damage, but the type of material being used, etc., and then matching it with the policyholders' information and the claims data, be able to very quickly determine what is the amount that needs to be settled as form of claims, right? Or you look at litigation, where you determine whether a claim is likely to go into litigation. If at all it is likely to go into litigation, what is the level of litigation that might happen? What's the probability that you will lose the case? and therefore it's much better to just settle the case. So there are multiple use cases, I think, which have become possible because of AI, compute power, and machine learning. I think it's a gold mine. I think with insurance companies, if they're able to put all of this to use, I think it serves much better for their own customers, but also for their business growth and profitability.
We had a question coming from the audience, and I'll come to you on this, Mark. The question was, given pricing at elasticity models are based on customer behavior in a historically low inflationary environment, how does the industry use data smarter to juggle the needs to push significant rate rise through at an even keel while maintaining retention versus the profitability, the balance between retention and profitability?
Yeah, it's a really good question, and it's a really tough one. That it's not easy. It's a very fine line, and I'm sure every organisation will have a different view and a different perspective of how they're managing that, because we're all trying to do exactly as the question asked. I think the ability to use data to turn that data around quickly, so real-time pricing, and being able to, absolutely be able to react to the market very, very quickly. In days gone by, your pricing might be, days, weeks, months, if you like, before you necessarily change your pricing. In the current world, you need to be able to move in minutes and hours, not in days and weeks. So I think being able to leverage sort of real-time or near real-time pricing, I think, is a really important part of that. And I think to really have good analytics and understanding what is a strange time and the models aren't working necessarily how people would expect them to work because of that low inflationary environment. So being able to predict to the what's going on in the market, and more importantly, react at pace to what is going on in the market, so you don't end up with any competitive disadvantage through that. It's probably the optimum way of doing it, and trying to figure out what that steady path is through. But it's a challenging environment at the moment to do that, and not to put too much rate through too quickly, or not put the rate through, and you'll get missing opportunities in both ways. So,
Pierre.
Yeah, I agree with Mark's comment. I would add something as well. If we look at the inflationary environment, so obviously it's driving up claims costs for a number of insurers, and I think using data in a smart way, you can try and manage that cost down. So identifying areas where there's cost leakage, or identifying areas where you can use data and algorithms to streamline processes, which then reduces cost again. So doing that effectively means you don't have to pass all of that cost onto the customer. You can actually operate in a slightly smarter manner using data. And then the second part of it, after you've done that, then having real-time data, having sophisticated algorithms that understand what is the optimal way of balancing rate increases through the impact it will have on lapses, and then taking a longer-term view of lifetime value, not just trying to make a quick buck, but actually you're trying to retain customers over a period of time, which will drive better profitability. And then I think the last balance is ensuring we treat customers fairly. I think it's difficult times at the moment. I think obviously you can just push right through, but it's again taking a slightly longer-term view, treating customers fairly, balancing the hit of inflation both from the insurer and on the customer. And I think you'll get to a nice equilibrium that then drives better results in the longer term.
Okay. Unfortunately, we have run out of time, so I'd like to say a big thank you to my panelists of Akhilesh, Mark, and Pierre. Thank you very much for your contributions.
Thank you very much, Jonathan.
Thank you. Thank you.
I also like to thank you, all the audience, for watching it, and of course, WNS, the sponsor of this webinar. But until the next webinar, it's goodbye from me. Cheerio, everybody. Goodbye.